Hey everybody, Jared Duckett, Duckett Ladd Dental CPAs and Advisors here with my business partner Bill Ladd, and just want to jump on here and do a quick video regarding the something we really haven't talked about before, payroll taxes. Bill, we're all about PPP and idle loan and that stuff, but here, we're kind of talking about employee payroll taxes, and this is, directly, I'm kind of looking off my screen here, directly, from the Presidential Memorandum, if you will, that came out August the 8th, so a little less than a month ago. And really when it came out, we started hearing from our clients, what does this mean? Employees get to defer payroll taxes for a period of time, but what does it mean? And so, really now we've got some guidance that this might kind of, as a lot of things, cause more questions rather than answers. There's always an answer you get and it causes two more questions. But, on August 28th, last Friday, basically the Department of Treasury kind of issued some guidance, and the IRS issued a notice about what this means. So Bill, I'm just going to start talking through here, interrupt, and I'll get your feedback on some things, but
sure,
try to keep this pretty simple if we can. And it is fairly simple to a degree. And so basically what it is any wages, or compensation paid to employees for the period of September 1st of 2020 through December 31st, 2020. So we're looking at basically 4 months of pay. Is that the payroll taxes on those employee wages just the 6.2%.
That's right.
Okay. Now typically you've got the 6.2 and the 1.45. We're just talking about the 6.2%. It is eligible for the employee to basically defer the withholding of that tax on their wages. And then now the guidance that's coming out is how that's repaid is starting January 1st of 2021 through April 30th of 2021, those 4 months, that's when it's going to start being withheld extra to repay that back. Does that make sense, Bill?
Yeah, so let's kind of unpack that real quick, because I think there's probably going to be a lot of misunderstanding. Some of your employees may come to you thinking it's a tax cut. In other words, I don't have to pay 6.2, therefore don't withhold it and give me more take-home pay. So that sounds great. Everybody wants more take-home pay. Of course, you worry that somebody gets take-home pay, they spend it, and then all of a sudden January 1 comes around. Well, guess what? Their take-home pay is going to go down drastically because now you're paying that back. So I think it's a lot of communication. It's going to have to be, maybe education's a better word, to your employees. If they ask, then yes, it's available, but here's what it means. And I think if you really unpack it, it could get people into trouble if they're not expecting that and they don't understand that it's a deferral, a 4-month deferral, not a tax cut.
Yeah, you're exactly right. Deferral is the key word. And just to throw some quick numbers at this, I'm going to use easy math of $1,000 a week. They get paid $1,000 a week, right? And that's the pay period. It's a weekly period. So if the employee elects to do that, then 6.2% of 1,000 is $62. So by deferring that and not withholding it, okay, their paycheck's going to be $62 more.
Yeah.
For these 4 months. But then on the flip side, when they're having to repay it, you see how it swings the total other way, right? So their paycheck's going to take a double hit, if you will, because they're having to repay that in addition to continue to start back withholding.
Exactly.
So that's the key thing. And, there's really no guidance. I mean, right now it's deferred, it's repaid. We've heard some things where it's going to be forgiven. No, don't count on any of that stuff.
Right.
It's a deferral. As Bill just said, a deferral. It's not a cut. So go into a couple more details here. So really, the question, eligible employees, who's eligible to elect, to not withhold this? And basically it's eligible employees are those whose wages or compensation are $4,000 or less on a biweekly period, or $104,000 annually for a salaried employee. So that's who's eligible for that. Wages, compensation are calculated pre-tax to determine if the employee is eligible. And then this is a key one here too. And Bill, you might elaborate on this. So each pay period is independent of another, right? Yeah. So meaning, let's say you get paid every 2 weeks. Let's say, your pay fluctuates because you get paid on commission type, and it's not just the same every single week. So for some weeks, it might be over that 4,000, say biweekly, over that $4,000 amount, but maybe it's less the next. So some you could be eligible, some you couldn't. Does that make sense, Bill? You follow that?
Yeah. So this is kind of where a lot of the devils are in the detail kind of thing. It's going to be an administrative nightmare. I feel like you may qualify one pay period, the next you don't, so you're not able to do that. So you have to communicate with your employee. This is also one of the first points of contention. And as we've been researching this, we hear, we interpret it to say that 4,000 is a kind of cap, that you can't go above that at all. We've heard other people say that up to $4,000 you can do it on, even if they make more. Our interpretation is that you have to make that or less, for these biweekly pay periods, or you don't qualify. And it's as simple as that. So that's clarification that's going to be needed. If there is a problem where you have one pay period, again, that's not in the realm of being able to withhold, well, then you're going to have to go back to that employee and explain that to them. So again, there's, I think, Jared, you said it well, that there's a lot of complexity. It raises more questions than it seems to answer with this one. Hopefully they'll give us 100% clarity on that particular issue. But until they do, I think you're safe to assume if they make over that, they can't qualify for this deferral.
Yeah, and I think probably the biggest question that is caused, if you will, out of this answer is what's the employer's responsibility here?
Yeah.
It's the employer's responsibility to start withholding it, as they pay it back after the end of the year, starting the beginning of next year. But then all kinds of questions come up, like, well, what if so-and-so leaves in December?
Yeah.
And I haven't withheld, and technically they owe that back. What's my responsibility as an employer to try to figure out where they went to work? And so that's kind of the question, is what's the employer's responsibility here? I mean, in the guidance, it calls the affected taxpayer the employer. It just says you may make arrangements to recollect that. So it's kind of, again, causes more questions.
When we first read it, our understanding, our assumption was that it was kind of the employee who's on the hook, and the employer was just the conduit. They withheld, they submitted. When it came down to it, it looks to me like they're maybe tweaking that a bit and now saying, hey, the employer is the collection agency. And guess what? If that employee happens to leave, you're going to be left holding the bag. So that is definitely something we need clarification on, because that's certainly going to make a difference when people are trying to decide. I mean, the way we read it too is that if somebody asks, you're required to do it. I don't know that there's anything out there that says you have an option of saying no. So it's certainly something you want to be aware of, and make arrangements that if it comes down to it, you may have to be the collection agency to make sure that gets remitted, because if not, on May 1st, interest and penalties can start accruing.
Yeah, you're exactly right. Interest and penalties is key, but then a lot of people I've talked to too think that maybe, and this is maybe before this guidance, that it was going to somehow be repaid through the tax return, the personal tax return. No, this is how it's going to be repaid, through payroll withholdings on top of, if you will, and they're reported through the 941 and payroll forms, not individual income tax. So anyway, we just want to kind of summarize that, hit that kind of high level again. As you saw, more questions kind of come out of this. But a big thing Bill said that's extremely key, it's a payroll tax deferral. So if your employees ask, hey, I heard about this payroll cut and I don't have to pay this, and that's not true. It's a deferral. You're going to have to pay it back starting at the beginning of next year. So anyway, guys, I hope that helps. Again, if you have any questions on that, reach out to us. We're here to help. As we hear any more guidance, we'll try to get out in front of you guys and see if we can help. But anyway, we'll talk to you guys soon. Have a great week. We'll see you.